Hi, today is Monday, the 8th of February, and we have seen last week an absolutely crazy recovery. Futures Sunday last, not yesterday, but the Sunday before, futures were opened at a very low level, just around this support on 36.70, climbed all the way up, tested 37.50, and if you remember comments on Slack, I said, well, this is a crucial level to go back into bullish mode or not, and it did, and it did even more than anticipated. It bumped on 38, 30, 40 for a while, which is now actually the bullish resilience, and it aimed straight to the strong resistance just above 3900. So now I would say that those levels often work as magnets. It's when the market is on bullish momentum, it's very likely going to go and bump onto one of those strong lines. The red lines, the yellow lines pivot, or the blue lines below. So that should not surprise us entirely. But if you look at 3660 to 3900, it's 240 points. This is just crazy. So now, at the same time, volatility, and this is the one out chart, volatility is plummeting to levels we saw in November, December, maybe around 20. And this is not a very pleasant environment to sell volatility. If anything, we should buy volatility. So for the trades we follow, this is not exactly the best time. Term structure, if you remember, the week before last, we had that GameStop incident, and the market went into very abrupt, steep backwardation, and now it's back into a flattish contango, meaning that whatever troubles, they are being pushed down the road to maybe April. So basically, it is pre-saga, pre-whatever, and it's unpleasant. That being said, it is not a very risky scenario with our trades. We're going to see that in the next video. So for the time being, I would say bullish congestion. If now 3900 breaks, which would be very surprising, but at the same time, why not? It could go and break this one. I don't have actually a target if it does. So let's hope the market will just congest and pause here for a while. If we look at the daily chart, 37.50 is still a strong resistance. We see this crazy whipsaw here. Fortunately, we haven't suffered too much from it, but this is quite an unpleasant environment for a market neutral trader. So we have now the highs on 39.08. So we will see. This line could jump to 39.06 like on each lower time frames, but it could aim much higher. We could even draw now a Feb target, if anything else. And let me just try and plot a Fib target here based on this low, and yeah, we could actually penetrate this a little bit further, and I would say the next target would be above 4,000. So let's see how it goes. So at this time, there could be further whipsaws. This is just a crazy market, but outright reversal below 37.50 or below recent lows is fairly unlikely. Okay, so now let's have a look for today, Monday. Here we see support resistance levels a little bit more clearly. We see that there may be some selling here, but I would say that we wouldn't have more than a Fib retracement around here. So I wouldn't assume the market will drop very sharply. Lowest Fib is 38.50, which was the highs there. So maybe. And as you can see, the first Fib is actually where the market bounced on the 5th, i.e. on Friday morning. Okay, so that's it for now. Bullish congestion, no outright reversal. Market is just too crazy for words. So I wouldn't be surprised if something happens and triggers a sell-off at some point, because this is not a very healthy market. Okay, thank you for watching. The next video will be on the current trades. So thank you again, and bye for now.